So the bottom line is we want to make accessible for users to participate in farming on LP strategies, which is where the best yields are. And I think it's long term. That's where the yields will be more sustainable because you're generating revenue, you're generating returns from trading fee revenue for the most part, rather than emitting rewards and dumping them. So the longevity of those strategies. So the expectation is users can deposit and sit it there for long periods of time and not need to like rebalance their strategies daily or like monitor them. So it's auto compounding, yielding, but behind the scenes we're deploying assets to an LP farm and then hedging that LP position. And then we do frequent rebalances to ensure that the position stays hedged, essentially.
Welcome to Mission DeFi with Brad Nickel, where we explore projects in decentralized finance that are innovating and driving our mission of financial freedom forward. Thank you for listening. If you like what you hear, please subscribe, rate, and review Mission DeFi and spread the word by posting a tweet to the show. All opinions expressed by Brad Nickel or his guests are their opinions and do not reflect the opinions of Black Knox, Material Indicators, or any other affiliated organizations. You should not treat any opinion expressed by Brad Nickel or his guests as an inducement to make a particular investment, follow a particular strategy, or become involved with any project. A project being featured on the show is not an endorsement of that project in any way. This podcast is for informational purposes only. Now, here's Mission DeFi with Brad Nickel.
I am excited today to have Sam from Robo-Labs, and they are the maker of a delta neutral investing product called Robo-Vaults, robo-vault.com. And I'm excited to have him on because I think a lot of folks today are looking for strategies that feel a little bit safer while still providing some good returns. So Sam, first, if you could introduce yourself, tell us about your background and how you got into crypto and building, and then let's get into the platform and the product.
Awesome. Thanks, Brad. Thanks for having me on.
Sure.
So yeah, my name's Sam. I'm also go by Smoothbot on Discord and Twitter. My background's in software. So I'm the CTO at Robo-Labs. I've been in software for 8 to 10 years, roughly, but only deep in crypto and DeFi for about 18 months. So, but always had a sort of an eye on crypto. I've been burnt multiple times, been drugged a couple of times by a few exchanges. A bit of fun, like Crypsy got me good. I was mining Dogecoin weeks after it launched back in 2022.
What got you good?
Crypsy was an exchange.
Yeah.
I got rugged hard. That sucked.
That sucks.
Yeah.
Were you get caught up in Cryptopia as well, since you're regional there?
No, I didn't. Unfortunately, I dodged that one.
I did. So
nasty. Yeah, so my background's mostly in embedded system software, which is like low level C development, mostly, and working on microcontrollers.
Hardcore.
In like the automotive and medical spaces.
Oh, wow.
So yeah, pretty high critical software, and that ported really well to Solidity Dev.
I'm sure. Yeah, that makes total sense, man.
Yeah. So yeah, why we built Robo-Vault was my co-founder, Safety Bot. He was doing a delta neutral strategy on DeFi manually, and he just kept getting wrecked because it liquidated, all the debt ratios of the strategy would shift too much. And so he was like, I want to build this into a contract. So that was the motive to learn Solidity, and his background's in data science. So he whipped up all the models in Python and Excel and was like, oh, wow, this is producing like 60% returns. And this would have been in February of 2021. And at the time we were working on some like arbitrage bots together between.
Everybody starts with arbitrage.
That's right. Yeah. And he was like, I was like, no, this is where it's at. And he kept pulling me back to try to ramp up the Solidity. And so I did, and he did most of the code for our V1. And I was there as like sort of a QA, like cleaning things up. Anyway, we launched in, I think it was July 2021, and things were going really well. Just like our average APY during that time was like between 60 and 100%.
Wow.
And yeah, it was pretty exciting. I was entering DeFi at that sort of level. So at that stage, I was just sort of a arm's reach lurker in a sense. And then releasing a product, it just throws you in the deep end into the culture. And like, it was a real like cultural shock being like, wow, there's such a deep, rich community here.
Yeah.
I found that really eye-opening and interesting. But yeah, so launch it did really well. We had a few hiccups along the way, but for the most part, the past 12 months has just been us iterating on the design, really working out how to solve the technical problems with deploying these active strategies. I'll dig into the strategies in a second, but there was some real complexities, particularly like off-chain infrastructure. So we've been through that. We've worked out, we're pretty confident in the product, and now we're sort of at a stage where we're keen to grow. We want to ramp up.
Cool. Very cool. And it's currently deployed Phantom and Avalanche. Is that
So we launched on Phantom, and we're on Phantom for about 9 months without delta neutral strategies. But right now on Phantom, we're running like simple auto compounder strategies, and we've shifted to Avalanche. So right now we've got 2 delta neutral strategies running on Avalanche.
Let's talk about kind of the concept behind the product, what the goal was, and then what it is and what it does for users, right? Like what if I'm an investor, why do I want to use Robo-Vaults?
Yeah, cool. So I'll give this sort of high level pitch.
Cool.
So like in DeFi, as you know, and many will, that there's a real challenge for the liquidity providers, that this new primitive being liquidity, providing liquidity to liquidity pools, exposes liquidity providers to losses through impermanent loss. So this is sort of like a new metric in like yield strategies, this impermanent loss. And it's proven to be a beast to wrangle. Like very notably, some institutions getting extremely wrecked because they aren't able to hedge IL properly.
Right.
They
Well,
essentially do.
it's complex as hell, right? I mean, considering if I just look at one pair, considering the ramifications of IL for somebody simple-minded like me, that's a nightmare to even think about. Like, oh, I need to adjust in this way, or it hurts. It really hurts.
Yeah. And there's a few like idiosyncrasies about it that really catch people out. Like with actually, I won't dig into I'll dig into the details in a moment about it.
Cool.
But yeah, so the bottom line is we want to make accessible for users to participate in farming on LP strategies, which is where the best yields are. And I think it's long term. That's where the yields will be more sustainable because you're generating returns from trading fee revenue for the most part, rather than emitting rewards and dumping them. So the longevity of those strategies. So the expectation is users can deposit and sit there for long periods of time and not need to like rebalance their strategies daily or like monitor them. So it's auto compounding, yielding, but behind the scenes we're deploying assets to an LP farm and then hedging that LP position. And then we do frequent rebalances to ensure that the position stays hedged, essentially.
And when you say hedging in this context, what does that entail? What kind of strategies does that involve?
Yep. So I'll dig into the weeds with our core strategy. So say users deposit USDC, that a portion of that USDC gets deployed to a lending market, say 65%.
Right.
And then a secondary token is borrowed against that. So say wrapped AVAX on Aave. And then that wrapped AVAX that's borrowed against it is combined with the remaining initial capital and then put into a LP position and then farmed, essentially.
Okay.
So that position, it's sort of because you're borrowing an asset and then deploying it in an LP, at a glance, it looks like it's hit. However, when you dig to the details, it's not. That position actually experiences impermanent loss because the amount of debt that you're holding in Aave is different to the amount of debt in your LP position when the market moves.
Got it. Yeah, right. Because
So
it shifts based. You started off with this chunk that you borrowed, and then you're ending up having that change based on the impermanent loss in the pair.
that's right.
Right. Okay.
Yeah. And so we modeled this and we found that like there's this pretty predictable curve. Well, it's a very predictable curve of what that looks like. And interestingly, on that curve, the top section of the curve, where it's like plus or minus 2 to 3% of market movement in debt ratio, is pretty flat. And then it ramps up. So it's a non-linear curve. It gets exponentially worse as you get out of that range. So what our strategy does is ensure we operate within a fairly tight range. So
Okay.
we have a bunch of keepers all running concurrently that monitor the blockchain, monitor our strategies. At any time, our debt ratio shift just slightly out of this bounds we set, triggers a rebalance transaction. And
Nice.
that transaction rams that debt ratio back to zero or shifts it in by a percentage. And so at that point, the strategy is actually experiencing a small loss because by doing that, you're realizing losses at that point, and the
Sure.
curve isn't perfectly flat.
And that's
Uh,
because you're selling off pieces to get a balanced equation in the LP. And so you are going to take a hit on on the fact that you've already lost because of the IL, but you're trying to minimize the damage by detecting the fluctuation enough early enough to rebalance before it's extreme.
yeah,
Is that
yeah,
right?
yeah, that's exactly right. Because that curve just starts to fall off a cliff past
Got
that
it.
point. So we correct it before that point, so it stays on this like almost linear, almost flat curve.
Nice.
And so in on an hours to days time scale, that the loss that you experience from that curve is usually less than the fee revenue from market movements. So in turn, the strategy ends up being profitable.
Very nice. That's awesome. Okay. And so in what you currently offer today, looking at the website, is you've got a delta neutral USDC and a delta neutral WETH strategy, right?
Yep,
Currently.
that's right.
And those are both on Avalanche.
Yeah. Yeah.
Okay.
So those vaults are deploying this particular strategy I just explained with the 100% allocation. So the other thing about our product is that we're leveraging B2 vaults, which are multi-strategy.
Right.
We can actually deploy multiple strategies currently and allocate different amounts to the to the vaults. So at the moment, it's got 100% allocation to this particular strategy, but the plan is, and we have multiple strategies in R&D at the moment. The plan is to sort of adjust those allocations to optimize return over time. And for the end user, that means that they can deposit and sit back and not worry about trying to chase yield too much.
That's awesome. Now, is the process of monitoring and automating this happening off chain? Are you using a platform like Gelato for automation on the back end, or how are you don't have to tell us every detail, but how are you making this work, right? I mean, you've got some fairly complex data that you're monitoring and massaging, but you want to automate it. You don't want to be sitting there trying to push the button because that's what we all screw up. So,
Yeah, look, one of the cool things about this is that because even all of this is on chain, even the logic that
nice.
detects when a rebalance is needed and the actual rebalance, there's a function called rebalance depth that gets hit. And it's a permission function, so we have to permit it. But yeah, we use a combination of a bunch of different keepers. This has been a big part of our journey. It's been working out what keeper infrastructure works well. So at the start, we deployed our own keeper, and it was very rudimentary, and its logic had a lot of flaws. And so we iteratively improved it and got it more and more robust. And that was working pretty well. But it had a few hiccup moments in December. It failed for about 30 minutes and ended up having like a 30-bit drawdown on a few of the vaults
Ouch.
and liquidations on another vault
Oh,
that had a 3% loss. Anyway, we ended up reimbursing everyone. That was back when phantom incentives were around, so we were able to reimburse everyone. But that took us back to the drawing board and being like, what are we going to do? Like this keeper, we're going to have to invest so much resourcing into building this out. So we looked at the market, and at the time, there was Open Zeppelin. They call it the Defender, and Gelato was available. So we quickly spun up keepers for both those, and we set them at a race. So we put them all in parallel. They all fought against each other. And the goal was to just evaluate what's the best, gives you redundancy and hopefully better performance. So we deployed those, and that did help. That gave us more redundancy and sort of a backup when our keeper failed. But for the most part, our keeper won the race.
wow. Nice. That's cool.
Yeah. So
I love that. I love that you guys pitted them against each other to see what would happen. That's brilliant. That's so much fun.
I think the Gelano team actually, they appreciated it. Like it meant that we could give them like live feedback, and they sort of they could tweak their model and their approach. And it is a really difficult challenge trying to fit a one solution fits all approach for keepers, because Gelato is serving us, which is like our requirements. It needs to be really highly reliable and fast. We need to land transactions quick. But if you tune the knobs to serve just us, you're going to be overpaying price in quieter markets, and in high demand markets, you'll be paying a lot for your gas price, which doesn't suit retail.
Right.
So so we understood that, and we sort of got to a point where we realized that this approach of having three in parallel still wasn't going to work. We're going to need to invest a lot of time into our keep. But interestingly, writers were deploying on Avalanche. Chainlink actually deployed their keeper solution on Avalanche. And we've been monitoring Chainlink's their price oracle, because we monitor the price oracles to check the lending markets are healthy that we deploy assets to. And we could see that they're landing transactions when we're desperately struggling to land transactions. So I was like, what's their secret sauce? I want to get involved in this. So when I came to Avalanche, I was like, awesome. Within 2 hours, I had a keeper pulled up ready to go, click live. And it's been absolutely killing it. So
That's
we've been
awesome.
running, yeah, we've been running with Avalanche's keeper, with Chainlink's keeper for about 4 months. And I pulled the data the other day and it's now landing about 82% of transactions, and our keeper is landing about 17%, and the other keepers are landing about 1%.
Wow.
So, yeah, so they've essentially, like, this is what you'd expect from Chain. They're the Oracle infrastructure of DeFi. If they screw up, DeFi is
Over with. Yeah. Which is
yeah,
terrifying.
sort of how I see it. So they tune their knobs. They tune their knobs to be reliable, high performant, and decentralized as well, and secure. So it's sort of been game changing for us that we now in our roadmap, we don't have this huge resource source like sink into keeper development, that we can shift
Yeah.
our attention to just building strats.
Yeah, I think that's a really important lesson there, is that this allows you to focus on building the strategies and testing and playing with those instead of worrying about all of the infrastructure that you have to worry about, right? Is it offloads that function so that you can focus on what your business is supposed to be about, which is, optimizing and creating new strategies. So, yeah.
Yeah,
Um,
absolutely.
What's been the process like between the two of you kind of building this out? Is this something where your job is just really let me implement and make this thing happen? And he's all data, he's a data analyst, right? So, or is this like, have you guys built a kind of collaborative thing of, oh, we're going to try this, we're going to try that? How do you guys make it work?
Yes, it's been a bit of a journey, and like we've been able to like find a way to work really well together. So in the early days, it was pretty much both of us just focused on dev, ultimate dev, and it was just back and forth. Like, we should do this, we should do that. I was super risk adverse. It was a lot of me being like, no, I need to do this. I need to do these checks. And Safety Bot's like, no, we need to get this out. Like, this is going to be work. The users know what to expect. So that was a massive learning curve for us to work through. But that was at a time when we were in a bull market. So you didn't have to do marketing. Like, the product spoke for itself. If you had a better yield, the users came. So our TVL peaked at something like 60 mil during that time, and everything was going smoothly. But as the market declined, we've essentially become more of a professional team. We've onboarded a bunch of devs. We now have a marketing manager, and we run we have a agile process. I have stand-ups every day with the team.
Wow.
So it's become like a
Very
real
formal.
business.
That's
Yeah,
awesome.
that's right.
Well, with your background, I can see you've probably been dr- just dying to have some process and setup
Yeah.
because you came from a world of completely controlled development, like, healthcare. That's just, and embedded systems. That's all going to be like meticulously controlled because it's so mission critical. But it's funny because that co-founder pairing between the two of you is actually, I think, the ideal co-founder pairing. Like the, hey, get to market, we got to go tomorrow, we got to get it out, versus the, "Ooh, wait a minute, I don't want this whole thing to crash around me. I'm the guy that's driving to market, and I have a guy that I've partnered with over the years on the tech side, and he's the guy that says, you got to chill out because you're going to kill us. And so and you get a nice balance that way. So I think that's really cool that you guys have struck. That's plus you have a technical co-founder instead of just a marketing guy co-founder, which is, I think, beneficial.
I think that helps a lot. You can speak the same language, and that when you're arguing, you can't just defend your point with too many big words that they don't understand. Like, you can't.
Yeah.
There's no beating
Yeah.
around the bush. You have to have
Yeah.
a strong argument, and you have to be able to back it. We both came up with ways to like try and nail down our argument. And a lot of those times we dig into the details and then see their side of it because we're trying to support our own argument, which is really interesting. Like,
That's
and
cool.
and like sharing blogs or quotes, or like, there's a book I've leaned on a lot, The Hard Things About Hard Things, but one of the founders of A16Z. There's some really good pearls in there, but we sort of use that like, yes, yeah, I'm digging into the weeds, but it was a real learning curve for us.
Yeah. It's funny because I was always the product guy and reluctantly the marketing guy, but I've never been I mean, I can write some code, but I definitely not a developer. But my partners over the years in tech, when we've done tech products together, have been frustrated because I wasn't the standard marketing guy. I was a guy that would dive into the APIs and the tech and understand it. And that was kind of my driving capability as a product guy, was I could see what was possible in tech that the guys who were immersed in it all the time didn't necessarily see. And so it would drive them crazy because I would suggest something that we should be doing to solve a problem. And they would look at the product slash marketing guy that doesn't write any code and say, you're an idiot, go away. Right. And then I would keep harping on it. Anyway, we ended up in this great relationship where I was actually shocked by his business skills and he was actually shocked that I could handle the technical side of it. And we ended up in a relationship where we're able to create things together that we probably shouldn't have been able to, but we were able to make it work. So that's when you talked about kind of those opposite extremes, it made me really think of that
Yeah, it's like
relationship.
yeah, see that you can see it every day, particularly in bigger companies that the technical leads, they have like this like safety net in technical complexity. That
Right.
when marketing go to market comes to them, they're like, I've got these things that I can say, and I've sort of there's a few details there that I'm just not going to mention because I don't want to go that direction.
Exactly.
That's going to make my life hell. But if you got someone that can see those points and just bury into them, you're like, all right, damn it, like there's no way around this. We're gonna have to.
Yeah, you got to just let it go.
Yeah,
I know you can do this. So, that's
so,
funny. So, I want to where one of the things that I see here, and this is probably a tangent we don't need to go too far into, but this to me is something that from a targeting perspective, as far as your go to market, like I understand that during the bull market, people just came because your returns were awesome. But even now, like, 8.86% on a delta neutral USDC and 12.88% on delta neutral ETH, that's the kind of stuff that sounds really good to folks right now. And you're sitting at 4.9 million TVL right now. And I really think that should be much larger. Like, how has it been for you guys as two technical guys trying to put this product to market and get attention for it? Like, I could definitely see like institutional clients saying, oh, well, I really should deposit, part of the treasury here while we're not investing in things, right? Or I could see targeting protocols for their treasuries to be in your system. And I'm not trying to be critical. I don't want it to sound like that. I'm just trying to say, what has it been like for you guys figuring out that go to market and get attention for this, over time? And have you just been
yeah,
conservative because you've been wanting to really make sure it works right?
yeah. So a big part of that of it is being conservative. So probably the first 4 or 5 months of this year, we were still in conservative mode. The market was crashing. It was super volatile. There was lots of spikes in liquidity shortages on AMMs. So the market was super volatile at the time. So we pulled back a bit. We reduced the collateral ratios, which sort of de-risks the strategy in sort of a proportional sense, and sort of just sat back and just took it all in, trying to work out how we're going to tackle this. And as the markets, it looked like the start of a bit of a grab season, we were like, all right, let's see how we can tackle this. Matt ramped up, sorry, Safety got ramped up, started reading books about marketing. And, and
Nice.
'cause one of the things from hard things about hard things is that if you're building a company and you need to hire a good candidate for a role, one approach is to do that role yourself, to really understand what's needed to actually to deliver that. So Matt he switched off the tools, dug into marketing. He tried to work out exactly what's needed, and he learned a lot in the process and really mapped out our user journeys, trying to work out who we're targeting, what the pain points are. So big part of what we've been doing is tackling those pain points, like
Nice.
cleaning up our UI. You'll see we've recently added an about us page so people can see who the team is.
Yep.
We've added a few more analytics, so you can see charting, you can see the historic charts in the UI, a few things like that. And then we've still got a long way to go. We're going to continuously improve on that. But really where we landed on the marketing is that we want to kick off, we're still going to continue focusing on retail and because it's a good market to enter because you can get feedback live and you get lots of good feedback. So while we're focusing on that, we're also sort of trying to understand the bigger players. So treasuries, the post DAOs and institutional players, hedge funds, those sorts of players. So we're in sort of an exploratory mode now where we're trying to discover their needs, trying to work out exactly what they need from what sort of product design that they're looking for to just the mechanics of how they're willing to accept funds, the contracts and regulatory needs that they have. So I think you're bang on there. I think there's a huge demand from institution, but it's such a black box and security is really tough that we can't expect them to come to us and look at our docs and understand it. I think we really need to go to them, explain to them what value proposition and really dig into the security to see if our security model and our processes match up against what they're looking for.
Yeah.
And so we're prepping the materials for that
Cool.
at this stage.
Yeah, well, and I guess your partner figured out that being the marketing guy sucks, and you guys hired somebody to do it to help
We
you
did.
do it. That's smart
We
move.
got come with me. We got an ex pro Dota player.
Yeah.
That's now our marketing manager. He's an absolute
Nice,
legend.
nice. That's
Yeah,
awesome.
yeah.
Yeah, I marketing is the most miserable job in the world to me. I mean, there are plenty of more miserable jobs. I don't mean to, but having had to do it because I was always pulled in to do it when all I really wanted to do was be the products guy. Um, it's horrible. I mean, there's a reason the average CMO only lasts 18 months in the corporate world, right? It's
Okay.
because it's never good enough. It's never, you're up 150% yesterday. I don't care what's going on today to go over that. And plus, it's like if you have any level of attention deficit disorder, being the marketing guy is a total nightmare because there is a silver bullet every 10 minutes coming across your screen of some kind or another. And for me, that's just a dangerous combo. Like I want to try everything. And so I resisted as much as possible. So I'm glad you guys hired somebody, and it's a miserable job to do.
Particularly hard. I think it's particularly hard when you're balancing other things.
Yeah.
Like you need that clarity and to focus on marketing.
Focus.
Yeah, because if you're building dev, you'll end up just burning dev time pursuing ideas that don't make sense in the scheme of things just because you think there's a good marketing angle to it.
Yeah. Yeah. Have you guys found it? I often say that in DeFi, the best marketing is community and partnerships. And have you guys found it difficult to build community around a product like this? Because it's not something you're constantly going to be, launching something sexy and new every other day, because that's not the nature of this product, right? It's something that you want to learn from and make sure you can protect people's money as best as possible. Has that been something that's been difficult for you since you launched?
On Phantom, it wasn't.
Aha,
It was
interesting.
pretty, it was during the hype, community just sort of flooded to us during
Right.
that time. And it was a bit of, and I don't know if it's different communities or different, what do I say, different like markets. I personally, I think it was more so the market. There was downturn market. The Discord servers just started getting a lot quieter across the board. So, and that's right when we launched on Avalanche.
Okay.
So in essence, we sort of had to, and there's different market participants. At FTM, there's far more like community paths, agents.
Yep.
On Avalanche, I think it's just a different demographic.
Totally.
And so we had to tune our marketing to encourage those community members. But to be honest, if you'd asked me a year ago how to build a community, I would have had no idea or thought it was impossible. But it's surprisingly like doable. You show your product, you be honest, you jump on AMAs, you answer questions. People are interested in what you're building. And we don't even have a token. So
Nice.
that's sort of like a faucet for kicking off a community, which we didn't have. So we've done pretty well even without it.
And that's
like lots of team members that just love digging into strategies and the tech and the details. And they're like, yeah, that's our core community.
That's awesome. I mean, what you just summarized is absolutely perfect. It's like you were able to build a community without a token because people were just really interested in what you were doing and the value it was providing to them. And then it's just a conversation, right? Then it's just engaging with people, getting to know them, and they're going to be more likely to say, "Hey, you're looking for someplace else to put your money. You should check out Robo-Vault because that's where I put my money." Right? That's fantastic. That's great.
Yeah, it's interesting that word of mouth on an internet product seems to be such a strong marketing angle that it's just people talking to people in different discords.
Yeah. Like I said, I think between that and partnerships, integrations, look, I think there's a place for some advertising, some promotion, et cetera. But I think that is the true nature of marketing in this space. At least now, we're so early that, when there's a penetration level of 25% of the general population, then it'll be a different story of fighting for attention. But currently it's like, get these people on board. Yeah, and I appreciate the fact that you guys are kind of focused on retail for now and, building up to going after the institutional. And when I mean institutional, I don't mean, I don't think of like Goldman Sachs. I think of, VCs and DeFi, right? And I think of, like we said, treasuries of the protocols, which, they live a real nightmare of managing their money. And it's funny because you talk to founders with large treasuries and they are no longer actually working on their products. They're managing liquidity and treasuries, and it's not what they want to be doing every day. So if you guys come, I think if you guys come to them with a solution that at least allows them to put some of what they have in something a little more safe than them trying to manage it themselves, I think you have a great proposition.
Yeah, like I guess we haven't spoken to all that many treasury, just managers on product protocols on chain. But are they deploying? I don't know, I'm asking the question back.
That's my
But are they doing like complex strategies, like complex, where they're actually doing yield farming, or is it single asset deployments?
it's a real mix. So some DAOs, Alchemic, Olympus, some of those that have pretty sizable treasuries, they've actually either created sub DAOs from the community that are set up to manage for them. They've hired, there are DAOs, that's all they do is treasury management for protocols that are managing. But the ones that have to actually do it themselves or are still managing part of their money, they're doing a mix of everything. I'm sure those that are resource strapped are doing really simple single sided yield stuff. But I do know that a lot of them are doing really complex stuff. But at the end of the day, it takes away from advancing what they built. Right.
Yeah,
And if they know they can set something and feel good about it and know that their treasury is gaining over the long term and compounding what they're earning, that to me, I think is a really strong sales proposition in that space. And I'm sorry, I didn't mean to turn this into let me tell you how to strategize your business,
no,
but
that's good.
I definitely think there's an opportunity for a project like this.
I think it's analogous to the keeper discussion we were having previously. That there's things that you can outsource that free up a team to build what they are set out to build. And I think treasury management is one of those things. There's no reason to have 300 treasury managers in the space that just have to manage their internal treasury. I think that's something that could be outsourced
Yeah.
to products. Yeah.
And who knows, maybe some of those brilliant guys that have strategy ideas in your community could form something around your product and be out there onboarding
Yeah, that's
treasury
right.
for you.
Doing
Yeah,
that
who
market
knows?
for us.
Who knows? That'd be cool. Um, Oh, I wanted to ask you guys during cascading liquidation season, were you guys a little nervous? Were you freaking out a little bit, or did you
Yeah,
just?
I was freaked out. No, it wasn't. We were prepared. We'd seen a few flash crashes, so we knew what was going to happen. But in like January, where things were brewing a little bit, and just things starting to ramp up, and the fee season was peaking. That's the real challenge. It's landing transactions during peak fees. If you jump on my Twitter, most of what I tweet about is just fees. These are transaction fees and gas spikes.
That's
Um,
hilarious.
yeah, and the comparisons on different chains, I love it. But yeah, so anytime I'd see a speak or a peak, and there was periods of 150K Quay prolonged for like 6 hours on Phantom, that was just like pulling my hair out trying to land transactions.
Um,
But to be honest, we bet really well. It was a really good test case for our strategies. We had quite a few deployed on Phantom at the time, and we're able to land transactions, able to maintain the hedge,
nice.
which proved to be extremely difficult. There was a few other players in the space doing similar strategies, these sort of active rebalancing strategies. And all of the ones I know about essentially had issues that caused significant drawdowns, whereas we maintained the hedge. So
Nice.
really good. It was a really good test case for us and a validation of what we're building, that we're actually progressing and improving.
Yeah, it feels insane at the time, and now it feels like, that was a great validation.
Yeah, that was easy.
That's great. I love that. I love that. So what's next for you guys? Is this something you're going to move on to other chains? Is this something you're deploying new strategies? Kind of what are you guys doing next with the protocol?
So there's sort of a few angles to this. There's refining the current product offering we have and tailoring that. And then there's sort of this wealth of R&D that we're looking at. So there's lots of different vault architectures and strategy architectures that we'd like to build. Really, it's working on refining exactly what we should be building, what we should be spending our time on. But on the strategy front, there's lots of really interesting strategies out there. Like what I was saying, that using the concentrated liquidity without fools, our LP positions, essentially plug and play, just swap out the LP for concentrated liquidity. And then also you can do a similar thing with the likes of Alpha or Taro, where you have leveraged LP positions underlying the strategy that ramp up the returns. It's like leveraging up our strategy. It means that there's more volatility, but long term, there's higher upside.
Nice.
So
Very nice.
pretty excited about that. And then there's a bunch of other strategies, for like shorting using perp protocols. So either per protocol or GMX in as a way to hedge, but they have additional challenges that there's slippage on entry and exit. So to do that, we need to build new Vault architectures to handle that so that users can essentially accept that they're going to pay slippage on entry and exit. Things like that.
Very nice. Very nice. And I mean, in terms of your current strategies that you have, are there limitations for you in terms of how much you can have running in these strategies? And is this something you then say, okay, we'll deploy cross chain because they'll work similarly in similar places based on Oracle pricing, et cetera?
Yeah. So limitations for particular chains. So there's a few layers of limitations. There's limitations that we can deploy on a chain, and that is they need price Oracle, they need highly liquid lending markets. We're sticking to Aave at the moment, and for new Aave, and we're dabbling with BankQ. Still don't know how to pronounce it, and we're pretty risk averse when it comes to third parties. That's sort of part of our sales pitch is that we do deploy assets, we do have contract risk. We're only deploying to highly regarded third parties, so at Uni B2 vlogs, as in Trader Joe's,
Right.
and well-regarded lending markets. So Aave. So I think that actually makes up for quite a healthy risk profile. If you compare that risk profile to say a bridge where you're deploying single assets as well, I think we actually match up. Well, not match up. I think we're competitive there from that. Where was I? All right. The question about different chains. Yep.
Yeah.
So if you tick those boxes of the protocols there, the chain's mature enough, then for growth on that chain, it's really about liquidity. So if there is if there's enough LP or if there's enough liquidity in the lending pools, we don't want to be the only LP holder. So we don't want to be 100% of Treasury's LP, because that means slippage on our rebalances will be too big.
Sure.
But we've seen on Phantom at times, we're about 50% of Spooky's LP or Spirit's LP.
Wow.
And the strategy performed well at those times.
Nice.
So we do have a ceiling, but it's a lot higher than we are now.
Oh, that's awesome.
Yeah. And the interesting thing is that a lot of people come to a product, see the APY and assume that if you double the TVL, you're going to half the returns, because it's a common just mind map.
That's the concept. Yeah. If I put more money in here, the more money that gets put in here, the less I make.
Yeah. And fortunately, that's not the case with our strategy, because we're deploying to a much bigger pool. So we play a far smaller role in that pool. And so the dilution rate is far smaller. So we found that with our current strategy, we've gone from 0 TVL to almost 5 million, and the APYs essentially haven't changed.
That's awesome
to produce.
That's great. And then, I mean, I'm assuming, that as markets recover later and things get better, then those APYs start to theoretically get back to where you were in DeFi summer, right?
Yeah, I felt like it's going to happen. And
that's awesome.
There's going to be a period where they pick up, and I swear our APYs are actually a really good indicator for market health.
Nice.
But anytime our APIs start to rise,
cool. Start you guys to the
chuck it in on your metrics.
That's awesome.
Right. It's a good indicator.
I love that.
Yeah,
I love that.
That's a big part of, we believe in the thesis that DeFi is going to be a huge part of the future. And so a part of our roadmap is to essentially sit back, keep building, keep producing really good products that have a market fit right now. But we're also anticipating we're going to have a huge rush of liquidity at some point. So we also want to prepare for that and ensure that we can handle that.
Did you guys raise money to launch the project?
In the early days, we had a friendly angel investor that helped us out. That was post-launch, not a large amount of money. And we're considering doing a seed round later at some point.
Very cool. No, I think that you'll probably sell that out pretty quickly if you do. And the cool thing is your community doesn't have to worry about being dumped on because you don't have a token. That's beautiful.
Yeah. Yeah, that's right. Yeah. I think that's the sentiment on tokens at the moment is they've been pretty down early for a while. So yeah, we wouldn't want to launch a token until we knew how to solve that problem. The retail users and those that have been part of our community for this whole time, confident they're not just going to get dropped on.
Yeah. Is there anything else we should know about the project, about you guys, about anything else that we haven't covered today?
I think we've done a good job. Just come check us out.
Nice.
See us up on Discord. We're pretty active, and yeah, we're excited about the future of DeFi.
Cool. All right. So one more question, because I asked this of everybody the first time on the show, and it's going to be interesting because you've been at this for 18 months in this space. So I always find the new guys have well, I'm not going to predict it. So what I ask everybody is this: is there a person or a project in crypto and DeFi for which you have, during your time in it, really built up a huge, a very high regard for, whether it's technical capabilities, missionary approach to things, ethical approach to things. The project is, awesome. Any of those reasons, anything that makes you inspired by or admire a project or person in the space.
Yeah, it's a tough one because there are so many like really capable. There's a lot of actors, but there's some really quality players. And there's a few things that I buy. One is just being able to produce a product and ship it and get it out has been, I find that like doing that myself, I know how hard it is. So one player that I think has done a really good job of this and is really good at delivering is Dr. Liquid Driver, really good too.
Yeah.
Otherwise, from at a high level, like how a team operates and how they deliver, I've got a lot of love for Yearn, what they do.
Sure.
They helped us out back in October last year. They found a vulnerability in our
That's
strategies, hit us up. We pulled the strategies down ASAP, and just how they handled themselves in that situation was just, it was so above board. And
I've heard that over and over again about those guys, like
yeah,
over and over
super high
again.
quality team.
Yeah.
Yeah. I don't know how
That's
they've done
awesome.
it. They've made a really high quality decentralized team. It's super impressive. And I've got two more. I've got one more, and I
Go ahead.
tweeted about this last week, and it's a DeFi Llama. That team
Ah,
is second to none. Like
Sick.
I've made probably about 15 like personal feature requests. All of them have been implemented. They're like little
That's
tweaks,
awesome.
added queries to filter in the URL, and they've absolutely nailed them. And like adding or updating your own presence on DeFi Llama is easy. I don't think it's ever taken, once I've created the PR, it's never taken more than 30 minutes for it to go live.
Nice. Nice.
Whereas I've worked with other players and it's just like terrible back and forth over emails. And it's just like, you're like fighting for them to list you. And it's, yeah.
It's amazing how many companies or teams don't understand how, when your product is a data product, that maybe focusing on onboarding the data would be a great idea.
That's right. Yeah.
It's always incredible to me. You reach out to these other analytics and dashboard products, and you're just trying to get your data to them, and
Yeah.
they make it next to impossible. It's incredible to me. That's a great one. I
Yeah.
love that.
Yeah. It's super quality team. And they're a lot of fun too. Yeah.
It's very cool. Well, Sam, thank you so much for coming on. I'm really going to take a much deeper dive into what you guys are creating. I frankly think you're beautifully positioned right now. Like I think, you're ramping up, you're growing your team, you have a solid product that the market wants right now. So, and I think a bear market's the best thing that could happen to you, frankly. So, I know that sounds a little strange, but I actually think products like yours, founded the way it is and built the way it is with the track record you have, actually puts you guys set up really nicely right now.
Thanks for that, Brad. Yeah. I think we're wearing the storm quite well, fortunately.
I mean, I know it doesn't feel good to be in a bear market. Don't get me wrong. I'm just saying, I think a product offering like you have is perfect right now. So, well, thanks a lot, Sam. I really appreciate it.
Thanks a lot, Brad. Thanks a lot for having me on. It's been great.
Sure. Appreciate it.
Cheers, mate.